Today, I'll show you a real student loan approval letter and share with you the most important things you need to pay attention to if you're taking student loans so you don't make the mistakes that a lot of people make. Let's get into it. So I'll get on my computer shortly and show you a real life student loan approval letter and point out things you need to pay attention to if you're taking student loans. But before I do that, I want to share a couple of things with you. I want to share with you the most important terms in your loan approval letter that you should not miss. You should pay attention to these things so you avoid stories that touch. So you avoid, being in trouble and being in financial situation. So I will share those with you now, and then I'll get on my computer and share a real loan approval letter with you, and we'll go through that together. Let's jump into it. So first thing you need to check is the interest rate. Of course, you already knew this, right? The money is not free. They are not giving you money and you pay back the exact amount. The interest rate is so important because that determines how much you end up paying back. So if you take a student loan of $20,000, in 10 years, you're not paying back the $20,000. You're paying back a lot more than that. So the interest rate is like the most important thing you need to pay attention to. Another thing you need to pay attention to is the first payment date. Like, when exactly are you expected to make your first payment, like the repayment of the loan? That's another thing you need to know so you're not defaulting the loan terms. You're not violating some of these terms. You need to know when, so you're not in default, basically. You need to know when you need to repay. So that's another thing you need to pay attention to is amount borrowed and an amount to be repaid. So amount borrowed is what you are borrowing today, maybe $20,000. Amount to be repaid is the sum of what you need to repay the bank or the loan company. So if you borrow $20,000 today, you may have to repay $50,000 depending on the duration of that loan and the interest rate. So pay attention to how much you're borrowing and how much you will repay. One more thing you need to pay attention to is the payment schedule. Like, when are you expected to pay and what exactly are you paying? So for some loan providers, you only need to pay the interest up to a certain point and then you start paying the principal amount. But for some, you need to pay a mix of interest and principal. Like, just pay attention to like the schedule they have in your approval letter and see what exactly you are expected to pay. While you're in school, do you pay only interest, and when you graduate you pay the principal? Things like that. Just pay attention to that. One more thing you should pay attention to is grace period, and I've explained that a lot on this channel. Grace period is basically they're giving you grace, okay? And they're giving you grace for some time. Basically, they're saying for this grace period, you don't really need to pay this or that, but after this grace period, you need to pay this. So let me give you an example. For many loan providers, they say you don't need to pay back your principal amount, like the actual amount you borrowed, until you graduate from school, or some of them say until 6 months post graduation. So while you're in school and within the first 6 months after you graduate, you are not required to pay to make any payments. That doesn't mean that interest isn't accruing on your loan. No, that's not what I'm saying. You will still incur interest, but you don't have to repay for some of them. So pay attention to the grace period as well. So now I'll share my screen with you and you can see a real example of a loan approval letter that I got a couple of weeks or months ago, or I think a month ago, and we can walk through that example together. So let's get on my screen right now. Let's get on my computer. All right, so this is the example. I took a screenshot from the loan approval letter, and this is what it looks like. So these are the most important things you need to pay attention to, okay? First is the loan amount. This is what you're borrowing. So you're borrowing $21,000 today, or really this person in this case is borrowing $20,000, but there's $1,000 of origination fee. And what that is they're just charging you for helping you get a loan. That's all it is. So $21,000 is what you're borrowing today. This is the interest rate, $13,000. Guys, this is crazy. When I was taking student loans 5 years ago, it was single digits. Now I'm seeing 13%, 14%, almost 15% sometimes. It is crazy. If you don't absolutely have to take loans right now, don't. I think this is just a really hard time to take student loans. So you need to make sure you're going in for a very lucrative program. Don't just like go for any master's program and you take loans. Like it's already crazy right now. It's 13% to 15%. That's what I'm saying. Anywhere from 12% to 15%. And then this is the finance charge, which is basically you will pay back what you borrowed, but this is the extra you also need to pay, and this is from your interest and fees. So this person is going to end up paying a total of $44,000. Whew, that is crazy. I can't even explain it. I can't understand it, but that is crazy. This person is paying back double what they borrowed. The other things you need to pay attention to if we scroll down a bit. Now, one question I get a lot on my channel here from you, my friends, is are they going to send me the money? Is the loan provider going to send me the money and then they let me pay the school, whatever I'm owing the school for my tuition? And I always tell y'all, no, that's not how it works. The loan provider will not send you the cash. They send everything to the school, and then the school takes out whatever tuition you're owing and then pays you the balance. So let's use an example here. Every semester, the loan provider sends your school $5,000. And let's say you have 4 semesters and you're borrowing $20,000, like we're seeing in this example. Every semester, the loan provider is going to send your school $5,000. And let's say every semester or most semesters, you're owing maybe $3,000 for your tuition. The school takes out their $3,000 and then the school will send you $2,000, the $2,000 balance. That's how it works for most student loan providers that I have seen and I have worked with. So you don't actually get anything, and that's what you're seeing in this example. The amount that will be paid to you is $0, but the amount that will be paid to others on your behalf. Others here is your school, which is $20,000. Now we see here that origination fee I mentioned is the $1,000. So this person is really borrowing $20,000, but with the origination fee, that's what makes it $21,000. So what are the other things you need to pay attention to? Your rate is fixed. That means even if interest rates drop generally in the US, next year your own rate will always be 13%, except you refinance, and that's a whole different topic that I can talk about later. But your own rate is not variable. This could be good or bad. If interest rates keep going up, then this is good, right? You won't pay higher interest, because if your interests were variable, you will pay higher interest as interest rates go up in the economy, right? As interest rates increase. But in this case, your rate is fixed. Basically, even if interest rate go increase or reduce, you're paying your own rate will always be 13%. So this is an important thing to pay attention to, because some people prefer a portion of their interest rate to be variable, such that when interest rates reduce or go down, whatever word you want to use, when interest rates decline, they can take advantage of that and pay lower interest, because interest rate is everything. It is king when you're thinking about student loans, because look at this person will have to pay $24,000 extra. So in total, they're paying $44,000 for someone that only borrowed $20,000. That's crazy. And then the other thing I think you should pay attention to is this late charge. 4% of unpaid past due payment, or $5, whichever is less. Basically, what you're saying is if you need to you will make monthly payments, once it's time for you to start repaying the loans, you make monthly payments. And if you miss any payments, we're going to charge you an extra 4%. And that adds up, my friend. That adds up. So you just need to pay attention to that and make sure you're not violating anything and you're paying on time. Now, let's look at the other thing here, which is the repayment schedule and terms. This is like summary of what your repayment schedule will look like. what they're saying is this loan will be a 148-month loan term. Basically, this is a 12-year loan. It's slightly more, but like 12 years. So you're expected to repay these loans within 12 years. When I took my loans, when I took the student loans, then it was I think mine was 15 years. Yes, I think mine was 15 years then. But this is a 12-year loan and your interest rate is 13%, which we've talked about. And what they're saying here is this is what your schedule will look like. The first 2 years, you're going to pay $227 every month. And then the next 10 years, you pay 313 every month. And the next 2 years, you pay 313 every month. So what does all of this mean? If you pay within, if you stretch your loans as they are using they are calculating here and they are showing you an example and saying if you pay within 12 years, like you take the loans 2023 and you repay it, you're done. Yeah, like you completely clear your loans by 2035. This is how the payments will work. Now, what I did, which I've shared on this channel, is that I repaid my loans within 1 year. Now, you don't have to do that. You can say, I'm going to repay mine within 5 years. I'm going to repay mine within 7 years. I'll repay within 10 years. But if you don't repay quicker, this was what I was trying to explain when I shared about my journey to repaying my loans. If you don't repay quicker and you wait for the entire 12 years, you make the minimum payments. What we have here, this 227, 313, they are the minimum payments. If you make the minimum payments and you don't clear out the loans for until the end of the 12th year, you end up paying more. You pay $44,000. Let's go back up. You see, this person is going to pay $44,000 for a $20,000 loan. That's exactly why I decided I was going to do everything to make sure I pay back my loans in 1 year so I don't pay crazy interest. And let me tell you something. When I took my loans, it was my interest was single digits, like much less than this, right? Almost like maybe a little more than half of this. I need to check again. But this person is paying 13%. So I took $100,000 in loans. If I were to take that at a 13% interest rate, like, can you imagine what I'll be repaying? So all of this to say, please pay attention to these things. Don't make mistakes. Everything is important, like on this document. So and I've shown you the most important things you need to know. So please pay attention to those things. And if you absolutely don't have to take loans in this season, it's just crazy. So maybe you shouldn't, because like if you have to pay back more than double, it's crazy. But if you're going to take loans, make sure you're going for a lucrative program. You're going to a school where companies that you're interested in recruit from if you are going to be doing a job. Just those kind of things to make sure you can repay, because this is just a lot. All right, that's what I wanted to quickly share. If you have any questions, let me know in the comment section and I will get to it. All right, let's get back to the video. So I hope you found this helpful. If you did, you know what to do. Give it a thumbs up and also let me know if you have any questions in the comment section below, and I will answer any questions you have. Also, always remember that I have Prodigy Finance's link in the description of this video. So if you want to explore Prodigy Finance, that link is always there. I am not saying that the example that I used today is from Prodigy Finance, but I'm just saying Prodigy Finance and also Empire, they are usually the links are usually in my description. Okay, I hope you enjoyed this and I'll see you in my next video. Bye.